This was supposed to be a celebration week. On Monday, after months of fear, we finally got the news everyone was waiting for. A peace deal with Iran. The war that had been hanging over this market, driving up oil, driving up inflation, was ending. And the market did exactly what you would expect. It exploded higher. The Dow hit a record, the Nasdaq hit its best day since March. For 2 days straight, we made new all-time highs. The fear was gone, it looked like clear skies ahead. And then Wednesday came, the Fed spoke, and in one afternoon, the whole party stopped. So this week taught us something that every trader needs to understand. You can get the best news in the world, but there is one force bigger than any of it. And this week, that force showed up and reminded everyone who is actually in charge. So let me walk you through 3 things: how the best news of the year turned into a sell-off in 48 hours, what the Fed actually said that scared everyone, and what it means for the rest of the year because the game just changed. And before I do, here is why this matters to you. You can have the perfect strategy, the perfect trade, but if you do not understand the one thing steering this entire market, you're flying blind. This week showed you exactly what that one thing is, so let's get into it. First, let me walk you through how the week actually unfolded, because the whole thing is a story. It started Sunday night. President Trump announced that the US and Iran had reached a peace deal. The war was ending. The Strait of Hormuz, the most important oil shipping lane in the world, was going to reopen. Monday, the market took off. Oil crashed because the war premium was gone, and the stocks ripped higher. The Dow closed at a record. The Nasdaq had its single best day since March. Remember everything we talked about? Oil feeding into inflation? Well, this was that chain running in reverse. Lower oil means lower inflation fear, and the market loved it. Tuesday, it kept going. The Dow hit another record, almost touching 52,000. 2 days, 2 records. That fear that had crippled this market for weeks was finally lifting. Everything was lining up. And then came Wednesday. Wednesday was the Fed. And this was the big one. The first meeting with the new Fed chair, Kevin Warsh. Now, the headline decision was boring and expected. They held interest rate, no change. If that was all, the market would have kept climbing. But it was not all, because the Fed also showed its hand on where rates are headed. And here is what shook everyone. Back in March, the Fed was projecting a rate cut this year. Lower rates were coming. That was the hope holding this whole market up. This week, that flipped. Now, half the Fed officials see a rate hike coming this year. A hike, not a cut, in 3 months. The Fed went from "we are probably cutting" to "we might be raising." And we have talked about this over and over. Lower rates are fuel for stocks. Higher rates are the brakes. So watch what happened. Wednesday morning, on leftover optimism, the Dow actually pushed to another fresh record high. Then 2 p.m. hit, the Fed spoke, and the market reversed and closed down more than 500 points. A record high in the morning, down 500 by the close. Same day, and that is the lesson of the entire week. The best news of the year, a peace deal, record highs, all of it got wiped out the moment the Fed turned cautious. There is no piece of good news bigger than the Fed. When the Fed talks, everything else takes a back seat. But here's where it gets interesting, because the story did not just end there. Thursday, the market came back. After getting knocked out by the Fed, stocks bounced. The Nasdaq jumped almost 2%, the small caps, the Russell led the way, climbing right to the edge of 3,000. The chip stocks ripped, with Intel up almost 10% on news it is teaming up with Apple to build chips here in the US. So how do you make sense of that? The Fed scares everyone on Wednesday and the market rallies on Thursday? Here is how. The Fed delivered the bad news, the market took a day to digest it, and then it realized something. Yes, the Fed is cautious, but the economy is still strong. The war is over. Oil is cheap again. Companies are still making money. So after the initial shock, buyers stepped back in. That is actually a healthy sign. It tells you that the market is not falling apart. It got bad news, it dropped, it absorbed, and it steadied. That is the market learning to live with a more caution. That is the market learning to live with a more cautious Fed instead of panicking about it. So we ended this short week. The market was closed on Friday in a much calmer place than Wednesday felt. So what does this all mean going forward? Because the game genuinely changed this week, and you need to understand the new rules. For the entire year, this market ran on one belief, that the Fed was going to cut rates. That belief is what pushed stocks higher month after month. This week, the Fed took that belief away. They're not promising cuts anymore. If anything, they are leaning the other way. So here's the new reality, the thing that drove this market all year. The hope of cheap money coming back is off the table. That does not mean the market crashes. Thursday proved it can hold up. But it does mean the easy ride is over. From here, this becomes a market that grinds instead of soars. A market where you have to be selective. The expensive, high-flying names that depend on cheap money will have a harder time. And every economic number from here, every inflation report, every job report matters more than ever because they all feed into that one question. Is the Fed going to hike or not? That is the situation now. And your job, as always, is to trade with it, not against it. So here are a few things to take into next week. 1, respect the new direction. The Fed leaning toward higher rates is not a one-day story. It sets the tone for months. So stop waiting for rate cuts that aren't coming and trade the market you actually have. 2, watch the data. With the Fed on a knife's edge between holding and hiking, every inflation and jobs number is now a big deal. We get fresh inflation data at the end of next week. That is the next thing that moves this market. 3, notice what is leading. That is absolutely important because this week when the market bounced, it was chips and small caps doing the work, not just the same old mega cap tech. Pay attention to where the strength actually is and trade within that strength. So you have to understand that the leaders may be changing and you have to change with them. You have to adapt with them. You have to adapt with the market. And 4, stay patient. We just had one of the most dramatic weeks of the year. A war ending, records, a Fed surprise, a bounce, all in 4 days. After a week like that, there is no shame in sitting back, letting things settle, and waiting for clean setups to show itself. The market will always be here. So that was the week. A peace deal sent us to record highs. The Fed sent us right back down. And then the market dusted itself off and showed it can take a punch. The big takeaway is simple. For a whole year, this market ran on the hope of lower rates. This week, the new Fed chair quietly closed that door. Nothing, not even the best news of the year, is bigger than the Fed, but the market did not break. It learned. And now we head into the second half of the year with clearer eyes. We know where the Fed stands. We know the war is ending, and we know the easy money is behind us. And the selective, patient traders are the ones who do well from here. Because like I said, the easy money is over. That is how I am playing it. Trading with the new direction, watching the data, and staying patient. If this helped you make sense of a wild week, subscribe. No hype, no fear mongering, just what is actually happening and what it means for you. Enjoy the long weekend, and I will see you next week.